Let's move on. Godrej Consumer reported a good set of earnings in Q1. Margins have expanded, the home care segment has grown 14% and organic volume growth has been good. Sudhir Sitapati, the Managing Director and Chief Executive Officer, is with us. Mr. Sitapati, thanks a lot for joining in. Can you tell us from these Q1 results, what can you infer for the entire year? Will this kind of performance sustain?
I think we had a good first quarter. A lot of it has been due to some of the initiatives that we've done in category development to grow categories faster. That part of it will continue. But I think, household insecticide had a good quarter driven by some amount of seasonality that may or may not persist in the next few quarters. So I would say this has been an exceptionally good quarter, but we expect to have reasonably good results, perhaps not as good as this one in the next few quarters.
Got that. And what kind of growth do you foresee for the year then?
If you look at our organic volume growth in India, it was about double digit. That is probably not the volume growth trajectory of the India business yet. We used to be in kind of low, mid single digits. I think it's higher than that, but double digit, I think we've gone past that pip because of certain external circumstances. Our Indonesia and Africa business, I think, will persist and continue the way they've grown in Q1.
Right. Mr. Sitapati, by when can Indonesia get to a 500 crore per quarter run rate, and how much more will Nigeria's currency impact be?
I think Indonesia, the macros in Indonesia are quite good. It's one of those countries that is doing quite well in the last few quarters. And our business, after some turbulence, has started doing well. So I don't exactly know when we will hit 500 crores a quarter, but this is a business that I anticipate over the next few years to do quite well for us. Africa continues to be pretty high turmoil. Nigeria in particular had a very big devaluation last quarter. Some of that devaluation, the impact on our P&L will be optical, some will be real. That devaluation is, by the way, generally good for our business and generally good, I think, for the economy when the currency goes to free float. But Africa continues to be politically volatile, especially on the currency front.
Okay, Africa continues to be politically volatile. Where do you see gross margins, ad spends and EBITDA margins for the year? Any kind of trend that you can give us?
I think, we are constantly looking at our primary focus is volume growth. And we really try and push volume growth to the maximum possible. The EBITDA margins, what they are in FY24, the EBITDA margins are pretty similar to our historic highs, except that the shape of our P&L has changed quite a lot. Our gross margins are lower than our historic numbers. Our advertising is higher, but our costs are significantly lower than our historic numbers, roundabout coming to our historic EBITDAs. So, again, I think the important thing is volume growth. The important thing is to invest in advertising. And the EBITDA numbers, that come will be a consequence. Q1 is quite reflective of the EBITDA numbers that, at the current situation look quite healthy at about 20%.
All right, Sudhir, when will the value and volume gap for soaps business narrow down?
No, I think in soaps, the Q2, the gap between volume and value will be pretty high because Q2 last year and beginning of Q3 last year was when oil prices peaked and soap prices peaked. And therefore, you've got a really tough base in terms of value. So there will be a pretty big gap in Q2 and the beginning of Q3 in terms of value and volume on soaps. The premiumization impact in soaps is not large enough as a category. It is not one of those categories that is rapidly premiumizing. And that is not big enough to counter-effect the impact of the price drops.
So what is the target for Raymond in terms of revenue scale-up and synergies from here?
Yeah, I think, Raymond's is very much work in progress, and we're quite happy with the progress that we've done. We first got to get the business in the right shape. We've got to reduce our inventory. We've got to reduce accounts receivable. All of these were very different from GCPL norms. So, in Q1, we did whatever had to be done. In Q2 also, we will do it. We hope that in H2, we will start seeing significant synergies both on the revenue line and on the cost line.
So what would the volume and margin impact of the 900 crore capex announcement be?
I think the capex investment of 900 crores, which is quite sizable over the next 3 years, it takes into account three factors. One, that we are bullish on our volume growths. We are seeing that our investments are paying back on volume growths, and we anticipate that our volume growths will be higher than our historic numbers. So we've got to put the capex for it. Second, we feel that the logistics costs of our business will reduce with this capex, and logistics costs now play a more and more important role. And third, we hope that with automation, our production costs, or our conversion costs as they're called, come down as a consequence of this capex. So the capex does about half of it is for volume growth and half of it is for efficiency.
Okay, thanks a lot for joining in and appreciate your time here. Let's slip into